Hello, it's Monday the 19th. I'm FxPlew and this is the market brief. So the Bank of England's mandate is to promote economic growth and keep inflation under the government's 2% target. Powell's Fed has been accused of pushing the US economy too close to recession with their aggressive rate action, but Andrew Bailey's MPC has been accused of being too cautious and dithering with the baby steps towards tighter monetary policy. We got the MPC meeting this week and the May inflation data is due before that. That's out on Wednesday. Forecast is for a little drop in the headline number as lower fuel prices are countered by continued higher prices of foodstuffs. But expectations is still very much for another 25 basis point rate hike when the MPC meet this week. That would take rates to 4.75%, but the market expects rates to peak at 5.5% or 6%. So that slow and steady approach could still see them hiking next spring. The rate hikes are all adding to the mortgage time bomb, which has been ticking away in the background for quite a while now. Current estimates suggest 1.6 million homeowners will face higher mortgage costs of around £15 billion, which is about £9,000 each, which would need to be found from post-tax income. Now that's a pretty nasty whack to the wallet and would surely drive a correction in the market, don't you think? The question is, when do we think that will come? And are we talking about a 5 or a 10% hit to asking prices? Or do you think we'll see something more aggressive? I'd certainly welcome your thoughts in the comments below, please. Over in the US, Powell is in for a pretty tough week. He's due to give testimony to Congress where he'll need to justify the Fed actions so far this year and may even give some ideas about the intentions for H2. He's expected to provide the rationale behind the pause in rate hikes announced last week, and we can expect him to roll out the data-driven decisions strapline once again. Inflation for May continued to fall. Headline inflation has dropped to 4% in the US now, which is a 2-year low, and it's down from 8% this time last year. So if Powell can manage to avoid a recession and engineer a soft landing for the US economy, there could still be backslaps all around. In the market, the dollar dropped in reaction to the pause from the Fed. That's as the rates differentials will affect the relative yield appeal going forwards. The dollar index fell to 102 as sterling rallied to 128.50 against the dollar. We kick off the new week from around 128.10 against the dollar. We're about 117.20 against the euro. And euro dollar is around 109.30 on the open. Right, that's it from me. Have a great week.
If you do not have a clue, then just tweet through and ask FxPlew.